Can you folks on Zoom hear me all right?
Yes.
All right, awesome. How about YouTube? Are you well, I guess someone, yeah. Anyone on YouTube hear me? Awesome. We'll spend a few minutes letting the rooms fill up, get a few more folks here, and we'll kick off here probably 3-4 minutes max. And Zoom folks, you should be able to see my screen now, correct?
Yes, Bob, this is Ram. We can see it. Thank you.
Awesome. Thank you. We'll get started here in just a minute, folks. Okay, we're gonna get going here. Somebody on YouTube is asking about the merch. I'll try to get a link out here at some stage. I'll take a minute break. Let me go live on the screen video. This is a Kendall Report coffee cup, and there's some hats, and there's actually somebody wanted a sticker. I actually made some. There's some stickers available. Anyway, some t-shirts, a bunch of stuff. I haven't really put it out there much. I think I put it on the Facebook channel. So anyway, welcome everyone. Today this is kind of an impromptu session. Jay and I were talking earlier today and just trying to address issues that you folks that are using the software are having from, it's kind of an open session, really. There's still some things that I want to, wow, that was interesting. Let's see here. I've got to let some folks in the room. Welcome everyone. Yeah, what I want to do today, we usually have an agenda. Don't really have an agenda today. Kind of want to address issues that you guys want to. I also plan on keeping this one just a little bit shorter. Those of you watching the YouTube channel know that we actually had the video out much earlier last night, and that was by design. And I'm trying to switch around. Last week was somewhat of a nightmare. Everybody asked when I sleep, and last week I didn't. I forgot to sleep last week, and I kind of burned it a little bit. So I decided I'm going to take back some control here of my time. Yeah, it looks like Jay put up the Streamlabs stuff. I bought some hats. I redesigned some hats and stuff. They're okay. I'm going to look into another merch thing. This was really easy to do, so take a look at that stuff. And yeah, okay, Mason put that up. Thanks, Mason.
Yeah, I didn't want to take credit. Mason did that.
Okay, I said the Kendall Report. Yeah, it wasn't you. Yep. Thanks, Mason. We appreciate that. And anyway, yeah, we're just going to keep it open, I think, today. I thought a lot about this. Like, we usually have a very specific agenda, but let's let's find out what you guys would like me to talk about. I always have a pre-designed show. We've got a couple of things that we've been working on that I think will be interesting, but they're not ready for prime time just yet. But they're getting there. We still have a lot of things that we want to do with the market grid. Those of you using market grid, we've got a couple symbols that are erroring out, and I went through them, and the error is actually coming from the trade station. So we have on the market grid, we have basically three processes that happen. We run it on trade station. We have an export feature to CSV, and then we have a database website where I take the CSV and it creates the HTML. Soon, probably next week, it looks like. I was talking to the IT folks this morning. I'm trying to see if he's on or not, but I don't see him. I doubt it. But soon we're going to have a searchable database, and it will be a gradual step toward advanced type market grid situation. So we'll continue to kind of step that product forward fairly slow, and probably 30 days from now it will look a lot different and have some other functionality. Even the plan is to have real-time quotes and lighting up cells and stuff when they get hit, those type of things, just so it'll be easier to read. Yeah, just looking around. I think we have we have a Fadi on the Zoom and we have one on YouTube. So, and I'll go through that in a few minutes. I'll talk a little bit about what the platform does and those type of things. Okay, well, I'll touch on that. But yeah, so yeah, as always, we always have a few folks coming in just a little later. So I think we're getting close to maxed out. But anyway, yeah, let's just start right there. Like I said, I set an agenda. Jay and I talked earlier this morning. We kind of went, yeah, we could do this, could do that. So I decided let's let you folks determine what it is we're going to talk about today. And I know maybe at the end of the show, I will maybe touch on some markets. We'll see. But I really want to keep it pretty clean today. So yeah. So anybody got some questions you were hoping to have answered today? Let's start there. Let's just go ahead and start with the Q&A, and then we'll see where it leads. Probably that'll lead me into some rant for 10 minutes or so that will trigger me into something like that. It's going to be a really short meeting, folks. Go ahead.
I don't know how important. Hello, Bob.
Yes.
Hey, this is Bill. I had a question on portfolios and entry points. Basically, I wanted to learn a little bit more about the drawdown and the sharp and those type of ratings on the portfolios.
Okay. All right. By the way, I never heard from your partner.
He's been very busy, but I'm sure that is forthcoming.
Okay. All right. All right. Well, let's state it one more time. You want to know on the Sharpe ratios on the portfolios themselves?
Yes, and the drawdown percents and basically what do you see as an ideal entry point for a portfolio that you've been back testing?
All right, that's actually a really good question. So, there was a two-part question. What was the other part?
No, I think that would pretty much cover it. I'm just I have some portfolios that are performing well, and I'm just trying, with your market analysis and also just the trend of the portfolio itself, trying to figure out an ideal entry point.
Okay, yeah, well, I'll just answer a quick question before I get into that. Alan on YouTube, yeah, the daily market grid covers daily, weekly, and monthly. It's a matrix. So if you follow me on Twitter, you can see some of that. I do put some of that stuff out today. I didn't look to see how the Apple market grid did today, but let's go ahead and dig into Bill's question here and see what we can what we can get. Still have a few folks joining here. Yeah, so I'm just hoping it would be really good to be able to bring up your portfolio, and I'm not logged into account, so that I can. Let me just see what we've got going here. And yeah, so a couple things, and this is actually a really good place to start. This is a way, and so there's a couple of things to consider, and this was actually one of the questions that Jay and I talked about this morning, was how do you determine, let's say you have, there's a two-phase question here. You have positions that you want to rotate into WaveTech and you want to match up what you're already doing with WaveTech, and then the other side is what Bill's asking, which is how do I determine how to enter the system at any given time. So in his case, or in advisors that are using the platform, you get new money all the time, and they got a new portfolio. How do I get this guy in? I think that would maybe answer that question, right, Bill?
Yeah, I'm looking more for the entry point of the entire portfolio. So see right there, as you have the average drawdown, average DDFI, and
Yep.
Sharp. I just want to make sure I understand those.
Yeah, I'm gonna have to find a better portfolio. I need more longevity than what we've thrown here. Let me just see if I can. Yeah, so you go to the, so one of the things you can do, hopefully this gives me, yeah, this is okay. This will work, I guess. Let's compare it to let's put the SPX on here so we can have some comparative. So when you're coming into a new portfolio and you want to look at where it's at, how to enter it. You build it today. I want to get involved in this strategy. Then there's a couple metrics that you want to look at, and it's really the main thing. There's 3 different metrics over here. The Sharp ratio. The higher the Sharp, that's a good thing. So 1.15 is a good Sharp ratio compared to the index at 0.8. So that shows that you're actually some alpha being created on this strategy. But as far as looking at the initial strategy, I would go to this page and start to look at the metrics that are out here. So average drawdown is the drawdown on these rolling returns. Looking back, the average drawdown DDF stands for all the way back to the inception. So you're going to look at the 1 year, 2 year average drawdowns. That's what this is looking at here, and that's giving you what the average drawdown is, and then the DDFI is all the way back to the history of that strategy. So in this case, they're slightly different, more on the index. The strategy itself is the same. So a couple things. First thing I would look at is what if there is a drawdown going on, and right now there is not a I need to go to another page real quick, so I'm going to flop you back and forth. We're going to go over to the summary first, and I want to look and see if there's a current drawdown, and of course it's at a new high. So I picked a great. So, but let's make something up here, and I'll see if I can find another one, because this is a somewhat complicated, but this is nice. This strategy is at an all-time new high. But let's say it was down, we're going to make this up, 1.5%, roughly 1.5. We would then go over to this performance page. We don't really need the index, but it's good to have that there just to be able to look and see what it's like. So the average drawdown has a little bit higher drawdown, but it also has a higher Sharp. So right now the average drawdown is 3.45. So what that means is that the average peak to valley, every one of these peak to valleys in this blue line here, the average is 3.4%. Now, and this was in the beginning of the year. That obviously was a lot more than that. It went from 25, looks down to 18, just eyeballing this thing. So there was definitely more downside risk than there has been before. But if that little aberration hadn't happened, they didn't shut the economy down, these numbers would have stayed. This was the one aberration that happened. But let's say we're down 1.5% and the average drawdown is 3.4. What I would look at that is that by entering the positions, like going over to the open positions and matching every position on this run, you would have on average about a 2.5% risk from putting the strategy on, not worrying about trying to micromanage every one of these trades. You just take it and you match it and you put it on. So if you had no money in this strategy, you got a chunk of money, I want to get into it, that's how you would get into that strategy. Now this is a tough one that I picked. I'm going to see if there's any more on this particular account. I'd like to find an account that's negative. I may log into a different account, but this account here, that you would just match these. And what it would tell you is that you would have roughly if the average was 3.5%, you were down 1.5%, then you'd have 2.5% downside risk. And this is the difference from looking at, if you look at the individual symbols, it might feel like there's much more risk in this when you look at where some of these positions are without going through and evaluating every trade on here, looking at every stock, trying to figure out, where do I buy this one, where do I buy that one. You just put the basket of stocks on. And this is a lot different than trying to trade individual stocks. What it's really about here is you're going to have the ability to put a basket of stocks, which is going to have that diversity from the standpoint of having all of these symbols on. And in this case, it looks like they all have between 2.6 to 3.2%. Here's a 3.7. Here's a big one down here. Peloton's has grown to 6.12%. But if you just match this column right here, if you just match this percent of the portfolio, you'd have 9% in cash. You match it down. If my hypothetical was right, and we were down 1.5 from a peak on a drawdown, then you would have on average about a 2.5% decline. Doesn't mean that's it, but that I'm going to go back to that performance page here, and I don't think we give a standard deviation of that. We don't. That would be nice to have standard deviation. I think we have another report that we built that we do get a standard deviation on this, but so there's no standard dev, but 3.4 is the average drawdown. So I don't know if that's answering your question or not, Bill, but that's one way to look at these things. So you can just go in and match the entire basket, and you're going to have not a lot of risk in matching this thing and just getting going.
Yeah, that I understand, and actually, yeah, that's very helpful. And then what exactly does the Sharpe ratio mean?
Well, it's a measurement of volatility and risk. You can it's basically just measuring betas and the relative risk. So this has got a little higher number. I've seen them up in like 1.5. That's really good. So you want a bigger number there. That just basically shows, especially when we let's put the index back up here. We put SPX up here, and SPX is 0.8. You want something bigger. That shows that that you are delivering some alpha to this strategy, and that means you're putting in performance above the index. Okay.
Yeah, that's awesome. That's very helpful. Thank you.
Yeah, and there's some other metrics that are available out there. This platform is limited. Portfolio Expert has a little bit more, I guess, in depth that you can go into. So, yeah, and one other thing, just while I'm on this page, the other thing to look at, and this is, I don't remember what's the name of this thing. Yeah, I don't know where these stocks came from. It was a random portfolio that I built in one of these training sessions. But it's been in play for a while here, so you're seeing the returns. Matter of fact, it's done really well. It's blasted to new highs for them. As the market went to new highs, it's went to new highs as well. So that's a good thing. But as we look at this rolling returns, while we're on this page, let's just stay with this report for a few minutes. It tells us that this shows us, this is a look back period. So this portfolio started in 2015. If we had held the portfolio from the second day or whatever, the first trading day of January of 15 to the same period in 16, we actually would have been down 8% on this portfolio. There was only, in that first year, 2015 was a tough year, but that was the only year until we got to some of the rolling returns on 2020, and March and April were tough months. So you had some negative returns. And that's looking back from March of 19 going forward to March of 2020. And most of those losses, I'm sure, were in March 2020 because of what happened. And then the same thing in April. Then you can see the turnaround. Then the returns over the year, you can see the one, if we go to September, the most recent month it finished, we had a 34.7% return from September of 2019 to September of this year. So that was a pretty good rolling period. And then we look down at the best and the worst. That 826 I mapped out there, the very first one was the worst, and the average was 20.62, and standard dev was 16. So basically, by putting money in this strategy based on this 5-year back test, you'd be looking at probably a plus 4, plus 36 expectation for a 1-year forward looking viewpoint. If we go down to the bottom, you go to a 2-year rolling, then you're looking at best 2-year strategy is 95%. Where is that one at? It would have been from 2016, August 2016 to 2018 was a 95% return on this. That was the best. If we go 2-year, going to the most current was 35. So it's pretty much the same as what the 1-year was. But you can see what the worst was when you go to a 2-year look back, the worst was 12.87. So if you started at the worst possible time and you did every transaction for the next 2 years, you would have ended up making basically 13%. The average was 52 over that same, and you were somewhere with a standard deviation of 22. You're probably, there is actually no negative numbers at all with the average 52. So you're probably plus 25, 30 to plus 70 just with that standard dev off of that worst number. So yeah, so this report is actually yields a lot of information of understanding when you put a strategy together. This is why you want to backtest it. We talked a lot about this on these trainings, is that what you get on this thing, this is building a basket or building your own mutual fund, so you can start to look at these metrics and you can start to see the advantage of running some money in a basket of stocks. Could be mutual funds or ETFs, but in this case it's all stocks. There's an advantage of running this basket, and I finally, after fighting with Robinhood, finally got my account going. I'm planning on doing a fractional share strategy with Robinhood, and I'm going to try to map out the journey of that strategy here, and be able to document it. So literally I put $1,000 in it. So I'm trying to see fractional shares. If I had just $1,000, what would it do, and how would I run that? That's probably, but I just want to start with some minimum amount and see if I could run a strategy of 10, 15 stocks. So I just putting that together. Just finally got my Robinhood account working today. Kept giving me some weird message about signing some clearing agreement or something, and I thought I signed it. But anyway, so but this report itself yields a lot of information and understanding what expectations are likely to do. But this only works. It only works if you do all the trades. If you start to eliminate, you might be able to make it a little better. If you cherry pick and say, oh, I don't like this trade, I do like this trade. That's, once you hire WaveTech and you put the symbols in there, we went through this in other sessions, and there's some videos on this as well on a Portfolio Expert website, is how to construct, walk forward, and do maintenance strategies on walking these strategies forward. And if you do everything in the context of methodically taking stocks in, putting them in the way that's suggested, is this is what it looks like in the end. Now, in this case, I don't think we've taken any stocks in or out. We may have just for demonstration purposes, but this type of, when you look at this report, it tells you a lot about this info. Yeah, I just see some folks talking about Market Grid on YouTube. So yeah, there's 150. Jay and I were talking earlier. We've got some new additions to come in. We're glad to add them. The plan is to put them in most likely on our whole database, and you'll just be able to search them and bring them up and graph them and do all kinds of stuff. That's the intermediate term plan. But for now, we're limited. It's on a grid, so it'll be searchable soon. I suspect next week.
Bob, Wayne, I have a question.
Yes.
If you go to research, so if you go to research,
yeah,
and then from research go to all.
I got to fix that bell. I'm sorry. It's an hour. Actually, in a few weeks, it's going to be, that's when the market close will happen. So it'll work then. All right, go ahead.
Okay, so go to all stats.
Yep.
Okay, so we're on the models. We've got daily 1.2 long and 3.2 long.
Yeah.
And weekly 3.2 long. When the database runs on the Friday night, obviously the daily one updates every day.
Right.
Does the weekly one update every day as well on the database? So when you download,
no, just Friday, So it's a weekly. So it basically waits for Friday's close, which completes the week or the last. So if there was a holiday on Friday, it would do Thursday, or if there, it just does that week and compiles it and gives you an intermediate signal from there.
Because sometimes I actually download them and go through them. I just want to know if the weekly one was actually running,
no, it's static all week.
Yeah, okay.
And by the way, I've been trying, I am going to reach out to you if we can find a time that matches.
Okay, yeah, great.
I got your email.
That would be great.
Yeah, because we'll do something with you.
I'm transferring a lot of stock across from my broker here to Interactive Brokers. So
okay, cool.
A lot of fun.
Yeah.
A lot of fun trying to get that to happen.
Yeah, just trying to figure out our time. I think late afternoon is a good time. My time is a good time for you.
I'm free anytime.
Yeah.
I've noticed doing this now full time. It's a lot of work keeping up with everything these days.
Yeah. I just every time I look, it's like 1:30 a.m. your time. When I go, oh
yeah.
So we'll figure it out. So late afternoon, maybe Thursday. Maybe
that's perfect. Yeah, just drop me an email and I'll read it with the still on.
All right, no problem.
Also, with the report builder, when you download the reports, you have to if you want to download them, you have to download them if you go to report builder. Oh right, yeah. The only way you can do it is say ER ratio. You can only do it by the ER ratio. You can't download the whole lot.
With these settings here.
Yeah, say I had them all ticked.
Yeah,
and
they don't come up on the whole report.
No, because if you go down to where it says table query options, the only way you can do it is select it by ER ratios. If you select none for all of them, it won't download because I think it's probably too much.
Down here, huh?
Yeah, so like I normally just go ER ratios and just download it by ER ratio.
Right. Yeah, that seems to be all I have set here too.
Yeah.
Current duration. It's real quirky. This thing's always been quirky, and I'm not sure what the logic is doing. It seems like the average days long actually works.
Yeah, I can do it. Like I just use ER ratios and just download each block and just import it into a database, then match it. And then quickly tells me everything I need to know, and then I've
Yeah.
got the data plugged straight into my research.
Yeah, and I think that kind of leads me. So, did you have a question around that, or just wondering if that's it?
Yeah, wondering if that's it. Yeah.
Yeah, I'll have to look into that, Wayne. I'll definitely do that and see what's going on. I'm just making a note to myself here that
ER ratio 0 to all.
Yeah. Yeah. It's interesting because on the Portfolio Expert platform, we can actually do some really cool stuff. And I was talking to one of our associates the other day, and I was thinking maybe there's an incremental, like a weekly something we can just deliver and put some CSV files out there for people to grab if they want them. Just so,
actually, that's a good idea.
Yeah, just for those of you that have good Excel skills or database skills, you can actually do some things, and So, but this thing's pretty. Yeah, it's very quirky, I think is the right word. And it's funny because we've had this out here for a long time, and pretty much all of our customers of the past never used this thing. Jay could tell you.
Yeah, I think it's great.
But yeah, just to kind of help on that question, Wayne, that's all I've been able to do is just do them in the little small batch groups of ER ratios, and then, like you said, put it together. But I've only kind of done like 2 different sets, whether it's the 100 to 150 to 200, then 200 to 250, and kind of stuck with that range. But that's the only way I've been able to do it. So yeah, having an option to do a wider range would help, but that's just kind of how it's set up right now.
Yeah,
that's my job on Saturday morning. I download it all, and then it's crunched, ready to work out everything I need to do.
Yeah, and that leads me into another kind of segue from that. So we'll take a look at that, Wayne. And like I said, I'll drop you an email on us hooking up at some stage here.
The data is so valuable. It's so good to have that like that.
Yeah, yeah. So, but it yields to another question that I saw somewhere, even on the channel itself or in a comment or somewhere. I've seen this stuff. I read through comments on the channel and things, and fortunately, we're actually very fortunate. We got a bunch of bots, so we spend half our time deleting bots, and then the other half that we don't have a terrible amount of trolls around, so that's a good thing. There's a few, but we don't have people that just like to be distractive. It's pretty damn good community, I have to say, to everybody that watches this thing. It's pretty good. But one of the questions that everybody's trying to go, and I think I saw, let me just look through the list here. I think Michael's on. Orenson, are you on, Michael? I thought I see him come in. Maybe he's not in. But one of the things that people are trying to figure out is how to get into the raw database, and it sounds like you're doing some of that and trying to find some ideas that might, like hidden ideas. It's like, I don't know, I love my Spotify, right? It's always finding new songs. It's got AI. It knows what kind of stuff I like and what I'm listening to, so it finds them. And that's actually one of the goals of a new platform I want to do, is we kind of look at the kind of things you're looking at, and we go, hey, this one's got to buy, and that one's got to buy, and sort of like being on Amazon or something, and it's suggesting that. But one of the issues I think that people are looking for in this particular product is somewhat handicapped because of what we're looking at here. And even if we go over to the home page and we bring up these individual list of the new buys and sells, there's it's you're trying to find a new idea. I still think the best ideas are going to be symbols that you already know something about than these random stocks that might come up here. I don't know what OBEO is, maybe it's a really great company, but I feel like putting money at risk, that probably some more thought should go in that. And the way that this system was originally developed was for you to have some sort of idea. And I know we got the screens updated, right, Jay?
Yes, yeah, they're updated.
Yeah, no one can get to them though, right?
That is correct at the moment. Yes.
So I know Mason's listening too. So we need to find a way to put maybe a download link on a Portfolio Expert site where somebody could grab the CSV. So we do have that. Was that sent over Skype? Do you know? Or can you send me like the latest over Skype?
Yeah, I can send it to you.
All right. But yeah, so what I'm trying to get to here is that trying to data mine and find those nuggets that might be out there sometimes is pretty hard, and it seems a little harder in this WaveTech tool to do than it is on some of the other stuff. But even then, there's only so much you can garner from that, and there are some great ideas that you can find. You just don't see a lot of these things actually getting materializing, or maybe something you're going to end up putting money into. I just think there's more thought needs to go into the I guess the selection process is what I'm talking about here. And Jay's going to drop me this thing over, and hey Jay, what I'm going to suggest maybe, and I think Mason's hanging around as well, is that maybe we even put this somewhere where we can just send a link to the CSV file to subscribers or something. We'll figure it out.
Okay.
We just need to have a distribution network mechanism.
Okay, thanks, Bob. Thanks for that.
Yeah. What else we got out there?
How about down here?
How's it going?
Good. A question for you. I've got a portfolio going. Went through my first kind of big reallocation day today, which was kind of fun.
Yeah, that is fun. I love those days.
Into Fidelity before at one time, so that was fun. But my question is, once I've got an open position on a stock, of course you get reallocations to buy other stocks. But do you ever get a secondary buy on a stock you already have?
No.
Okay.
No.
Why would that be?
Yeah, so it's actually a good question. No on WaveTech, yes on Portfolio Expert. So,
Oh, really? Okay.
yeah. So, I'm actually participating in this symposium. It's for investment advisors, and 2 weeks from now. So, actually 2 weeks and a day. Matter of fact, I'm going to have to change the live stream on the 28th because of this meeting. But one of the things I'm talking about, which is what you are referring to, is the ability to trade the same stock on different time horizons. What we've talked a lot about is having the short-term model. Right now, WaveTech only allows you to put the stock in one time and you're done, and you have to pick whether it's daily or weekly. And Portfolio Expert, I can take the same stock and trade it 3 different ways. I can trade it short term, I can trade it with a daily model, a weekly, and even a secular model or monthly. So it goes to these long term, and it really creates some amazing dynamics. Most of the time, weekly, monthly is the best, is what we've found. But sometimes it's if you can throw that in. So, but it never buys more, because let me try to go backwards on this and explain what happens. So when you put a constituent list in, it makes, depending on how the portfolio was built, you should make like a sizable bet was filling up. So for instance, let's say we had 100% cash, it's March, stocks start to roll in. You're going to make the biggest bet with those initial stocks that you're getting buy signals off of. So you're going to make up a scenario where you got 20 stocks and you're going to make 5% bets. that just make it linear to make it easy. It probably would be closer to 6 or 7. But once you use all the cash, it says, hey, I don't have any more cash anymore, and you got more ideas. Let me restructure the portfolio for you. So it's going to sell down those stocks that you bought originally and go into a linear calculation. So as you get into more and more stocks, it's going to chop off profits that you had. So I suspect if you had a reallocation sell today, some of the stocks you sold, you had profits on.
Yeah, well.
And so what happens then is the new stocks that you bought, part of the money, in some cases I've seen it where 100% of the money is coming from profits from other stocks. So basically you're playing with house money on the new bet, right? When you come in with a new signal. So that, a lot of times it'll be, very close to, or like I said, I've seen it where 100% of the money, maybe you have 2 new buys and it reallocates and is taking profit on the previous symbols, and you're playing with house money. You just took some profits and you took all the money you made on, I used to do a gambling casino. It's actually is basically a gaming theory where I'm taking profits from one pool of mechanism that I'm making bets on, and I'm literally top slicing. I'm scraping off profits, and I'm making new bets on that new idea, that new stock. And what happens, Dave, my old partner, and I figured this out a long time ago, is that it actually causes the growth of the equity, which is the goal here, to actually accelerate the growth. It's much better than if I would have just, always, like, okay, well, I don't have enough money. Well, I'm going to sell that one because I don't like that stock anymore, and I'm going to put this new stock in its place. That strategy doesn't do as well as top slicing and slicing profits off and redistributing the profits. I call it profit harvesting is the strategy that we develop there, and that strategy will actually cause you your money to grow faster, which is the goal here, especially inside of a portfolio environment. It's one thing to buy Tesla and get lucky and it goes up from 150 to 3,000, but it's different when you're running a portfolio and you're making incremental moves, and then ultimately what happens if the market rolls over, you'll just start raising cash, and then you'll have a balance of the portfolio building cash. So you're going to change the risk to the marketplace by raising cash. And I know Ray Dalio has been famous for calling cash is trash. Well, to me, it's not.
Right. Oh yeah.
I think and yeah. Sure, trash is cash if you're going to sit there and hold it for years, but that's not what's happening here. So.
Right. Yeah, no doubt.
So does that make sense? Why that's just the methodology we came up with, and it really came from the problem that we were solving at the time was we have more ideas than we have money. So how do we use all of our we looked at our ideas of being 100% valid. Hey, we got a good idea. I need to find a way to fit it into that pie chart, which I can only spend 100%.
Right. Yeah. Yeah. No. It's good. That's. Yeah. I was just like I said, I was kind of curious.
No. It's a good question.
Add on there, but why do you need the add on if you can top slicing like that? It's probably, like you said, it's probably better.
Yep.
Okay. Yeah. Another question, real quick too, slightly unrelated to this one. Yeah. On all your PPM graphs and whatnot, have you ever published any kind of like a how to read this? And
there's a section on the channel that's understanding my process. Yeah. Hang on one second. I'm gonna mute everybody and mute back so we don't have the bleed. So you can just have to turn your mic back on.
Oh, okay. Yep.
Okay, there you go. Yeah. So yeah. Answer the question again. I'm sorry.
Yeah, I was just wondering if you've got how to use.
Oh yeah, yeah. So
to
Yeah, so if you go into, if you go to Kendall report, there is understanding my process, how to use the grid, PPM indicators.
Oh, okay.
That's pretty casual that day. Difference between WaveTech, okay. Yeah, so and I plan on doing some more of these, but that's a place where you can find that out, and that's probably useful right there. And I haven't watched that for a while. It's only 5 minutes. I need to watch it and say that. I think I was filling a box at the time when people were asking questions. That was what, 6 months ago. So yeah.
Okay, great. Appreciate it.
No problem.
I'll take a look.
Hey Bob, another question I have. Is there a way to link the orders that are being put on a database directly to the broker?
There is actually, only if it's in a portfolio. Let me see if there's any. Yeah, I got one here. Let's go to my options live strategy. So I can do order CSV here. Let's see what comes up. And yeah, you know what? It's going to show me, like right here, it's just going to show me the number of shares. I was curious what this one shows you. We are actually working on that. Like if you're like in this portfolio here, if I go over to the orders page, this was the buy. What you need is this %. You need that exported. And I thought we exported the percentages. And I keep forgetting to do this. Hey, Jay, would you make a note as well? We need to get a hold of Mitch and see if that old order calculation, we had something in there, Art, that you could go in and just like cut and paste this into a spreadsheet, and you could put a dollar amount and it would figure out how much to buy. And if it's just one trade like this, you should be able to put it right into your broker. We used to, if you notice, there's a column here for trade. We used to have a button there that you could click. And I don't remember why it got removed.
Will it be connected through like API directly to broker, or is it going to be manual for the whole listing of the stocks?
Right now it is manual. I believe, I thought on this order CSV that it gave you more detail here. I'm gonna have to look into that on that order page, because there were some things that were changed. Because we kind of revived this project, this product from the grave, so to speak. And so there's a couple things here that, you know, I would have swore that, like I said, that's why I opened up this CSV, hoping that I would see the actual percentage there, and it looks like all it's showing me here is a number of shares, which isn't useful at all. Yeah, I've got it up, and I'm bringing it off the other page here, so it's just showing me, you know, that's not helpful. So yeah, I'll look into that, and if you would, you know, maybe even send us a support ticket on that, just so we can follow up, make sure it just doesn't fall through the cracks.
Okay, thanks.
Yep. Okay.
Another quick thing, is there a way to have a better quality on the chart link when you click see? It's just little blurry there.
Those charts are 22 years old. That's actually this right here, right?
Yep, exactly.
Yeah.
Because it's really hard to see, and maybe the have some kind of, you know, better y-axis, and you know.
This was the same charts that Yahoo used in 1999. And we were talking about this chart module the other day, trying to figure out a way to upgrade this thing. And at the moment, like I said, I was trying to get this out, and one of the things that we do have a much better platform for all of this, but it's the charting is a problem on this thing. That is, we were just talking the other day. We had a meeting on Friday with some folks, and we're going to have a UI person take a look and see what it would take to put a new charting library in this thing, and possibly put try to make it actually look a little better and be actually functional.
Also, another kind of question I have: in future, will you be working with the WaveTech kind of improvement to see if you can import the positions from the current holdings that people have on E-Trade, Fidelity, and others directly to the WaveTech in your portfolio, or it's going to be manual?
Yeah, that's a tough one, because WaveTech is a modeling process, not a tracking. So it can't take your positions and do that stuff. It doesn't know how to do that. It's always been a model that you run. It was built to go the other way, to take it from here to the custodian, not from the custodian to here. And so that's why the matching process, and I think that was something that somebody had discussed the last week. We had a conversation going on about that. But yeah, so it's not a portfolio tracker. It is actually a modeling tool. So what we're going to generate here, the goal is to probably have an account, maybe open a separate, what we call a household account, maybe a special account that's just for the portfolio manager, and then you match all the orders and everything gets done to that particular portfolio. And then it, like I said, it was built to take it from this to there, not to go the other way.
Got it.
Yeah, and we've had a lot of conversations, development conversations in the past, of actually, talking about how we could integrate positions like that, and where there would be like exceptions where you could, we put a lot of thought into that in the past. Yeah, so. Yeah, just for the community's sake here as well, as we are, one of the things that came out of the conversation the other day is actually, we have a ton of mutual funds in the database. Probably some mutual funds, we have all maybe 2 or 3 classes. I know one particular mutual fund that's in there 6 different ways. It has actually a different symbol. There's A shares and C shares and I shares, and it goes on and on. So there's a lot of that stuff. So the goal is to clean that up, also get the mapping for the symbols cleaned up substantially here, and actually getting that squeaky clean. We're looking at a data vendor to map that out right now, and that's in the project that needs to be done, because both WaveTech and Portfolio Expert use the same mapping mechanism.
Hey, Robert, this is Mick.
Yes, Nick.
Hear me?
Hey, Mick.
Yeah. Hey, I just want to let you know that I really enjoy your channel and your training videos and everything. And I think it was yesterday you were mentioning something, and I watch your morning commentary every morning and your analysis on the technicals.
Yeah.
And I think you mentioned something about making or having availability to some of your indicators that we could, match our like TradeStation charts with yours.
Yep.
So kind of, get a grasp on how you're viewing that, and then look at our charts too, to kind of like tune it together.
Yep. I actually talked to TradeStation this morning, so we're getting close to getting it on the App Store. And you also have, are you a TradeStation user now?
Yes, sir. Now, really, that's a really good platform.
Yeah. I've been, literally have been with TradeStation since 1992. So,
Yeah, and so I'm looking forward to getting those indicators so I can match with what you're talking
yeah,
about.
not only will the indicators be there, but the TSWs will be there. They actually they require you, so you can use the indicators individually, but you'll actually have the exact TSWs you see on the platform every day. So,
okay, great. Hey, I'm telling you, you're doing a great job, and I really enjoy your.
I appreciate it, man. I really do. I've been doing this job a long time. But I appreciate that.
It definitely shows.
It should, right? Yeah, I know folks always show up on these live streams, and I always feel bad on the YouTube side because this is all software training, and tomorrow is the live stream for the market. So I hate to. I got praying hands to talk about. Yeah, and no, yeah, want to do charts. So anyway.
Also, Bob, quick question on the portfolio. Is there a minimum number of tickers that you need to put to construct a really good optimized portfolio? And if you can mix match weekly or daily models within the same portfolio?
Jay, you want to take that?
Yeah, you can mix daily with the weekly. We were actually just talking about that on the chat. When you're entering the symbols into your portfolio, at the very bottom, you'll see where you can optimize daily or weekly. You can utilize that. I do apologize. I didn't hear the first part.
Oh, the first part is how many
The
symbols?
minimum number of symbols to have a
okay.
good enough portfolio.
Okay, yeah, I was trying to answer some of the questions on the chat. So, when you go to the starting equity section, it's a really awesome guide what Bob has put in there, where it kind of gives you, I forget what it is, like if you're doing 15 to, I forget what the increment is.
Yeah, but
like,
let's forget that. Go to what you do. You're the master of a few stocks in there, so forget all that. Tell them what you do.
Okay, so what I do.
Forget what the software says.
Well, I just try to give you some.
No, that's all right.
I love that. I love that guide.
No, it is handy, and I'll show that to you. But I want Jay to actually, go through that because it does tell you on. I think on the, it tells you.
Equity.
Beginning equity. Yeah, there it goes. Yeah, it gives you some ideas. But now with fractional shares, these ideas are all out the window. So if you have a broker dealer with fractional shares, then there is no minimum. If you do have to buy shares, then there might be a minimum. But Jay, go talk about how Jay's been really one of the. He's played with more settings than anybody in the software, I think, from the standpoint of taking a few amount of stocks and trying to get squeeze the most juice out, right, Jay?
Correct. Yeah. And this year I've definitely dove into the smaller portfolios, so it works well with your question. Is if you're working with anywhere from $10,000 to $20,000 in a portfolio, I would try to stick with 8 to 10 stocks. Because if you start trying to put 15 or more stocks in there, that's just too many stocks versus how much money there is to manage that. So you'll dilute the profits with that. The other thing isn't just strictly the number of stocks, but obviously, are they $5 to $10 a share? Are they $50 to $100 a share? You can usually, on let's say a $20,000 portfolio, if you're going to stick anywhere from $20 to $30 a share, maybe you can go up to maybe 14 symbols in the portfolio. That won't be too bad. But if you're wanting to throw something in there that's over 100, I try to stick with maybe 1 or 2 symbols that are over 100, but try to mix them with $20 to $30 shares.
I'm going to make one other comment here, Jay, real quick.
Okay.
Is
Sure.
The other thing that you want to make sure when you're doing this, Art, is that you're getting. I'm just bringing up the trade log. You want to see these reallocation. You want, if 5 isn't enough, you're not going to get a lot of these reallocations. Probably 8 to 10 is a good number for smaller, and you want to make sure you've got the allocation factor up high enough that you're seeing these reallocation cells. And we've done some really intense looking at this process, and this is what I was talking about. These reallocation cells is that profit harvesting that I was talking about, where it's selling down pieces of stock to buy. So in this case here on 8.3, I'm going to block this out here on the screen. All of these symbols were part of a run. This was a pretty intense day in the markets. You were buying all these symbols and you were selling down all of those symbols. And this was that where you're harvesting profits. Most of the time you're taking profits off and you're reinvesting them into these new ideas, because the only time these reallocation orders show up, let me just block those out. Only time those show up is when you've run out of cash. So I got all these new ideas, but I don't have any cash. So it has to go in and reslice the pie to make everything fit. Now, I don't know how many stocks are in this strategy I pulled up. I think there's 31, so there's a lot of symbols in this one. But you want to make sure, at least when you build it, let's say you put 8 or 10, you want to make sure that you're actually looking at that, and you should see some of those increments. And I know Jay, when you build a portfolio, we're going to make a suggestion based on this high activity. When you get building, I'm just gonna bring up anyone that I've got here just real quick, just to show you. But when we get to this right here, this activity liquidity, it's going to generate a number just by running the model. It's going to run and look at all the stocks that you put in there and determine an allocation factor. Jay, what's your factor? Like sometimes you double plus whatever it tells you, or
for the allocation?
Yeah.
Yeah, especially on those smaller portfolios, I do bump the allocation factor quite high. My Ninja Blender, like the Ninja Strike portfolios, are very aggressive, and you can actually see it on the screen right now. He just exited out.
I was gonna see if I have Ninja up here.
I don't know if I shared the newer. I don't think I shared, because I have actually worked on that and modified it and changed it around. So I don't. Okay. I may not have reshared the newer.
Yeah,
version.
and I'm on. Yeah. Go ahead.
And you're on the other account.
Yeah.
But with Ninja Strike, I actually went where it's actually 0.3 as the allocation, which is incredibly aggressive.
Yeah, that's like
very high.
0.3, 30%. So what it means then, what we're bouncing around here is what it means is that you're going to get, what you're going to get is, as soon as you buy 3 stocks, the 4th stock that you bought, you got to reallocate. You got to start hitting that profit harvesting model. And once that starts to happen, then you're getting enough of that activity to drive that engine. And what I was saying is, when we did that, we found that about 65% of all the profits that come from a WaveTech strategy come from that model.
I see. So if I got you right, also it's not a good idea to put a very high price ticker, such as, let's say, Amazon or something, with very low price tickers such as, let's say, GE or some other.
Yeah, it can be medium, but just like I said, I would, and if you, Wayne was talking earlier about going to Interactive Brokers, I think he said, and they have fractional shares. So if you have fractional shares, then you can do this pretty easily. And you don't even have
that will matter. Got you. Okay.
Yeah.
Thanks.
So if you have that broker, then that's a good thing. I know Schwab's doing it now, retail, as is Interactive, and Robinhood also has them. So I'm not sure. I think there's some other folks out there. Those are the only ones I'm aware of.
And for me, I want to continue just a little bit more with on developing the portfolio, since I covered the lower end of $10,000 to $20,000 portfolios. Because I build a lot, they're $100,000 to $150,000 starting equity, And on those, I usually try to shoot for no more than 25 symbols. And again, if some of them are a lower, slightly lower price, maybe as high as 30. But I usually try to stay within a 25 symbol range at 100 or usually like 150,000.
Yeah, because
and that allows you to have some that are about what $150 to $200 a share type thing.
Yeah, so when we get into that beginning equity, you know, there's your numbers, 25 to 35, 250. That's
kind
of
a lot of times I do stick with that, but yeah, usually right there where the second line where it's 20 to 35 stocks. I do get some really good performers even at if it's about 23 to 25 stocks. 150,000 I can get some real profitable portfolios that way.
Yeah, and like I said, and Art, what you can do is you can build these models for that number and get it done. And like I said, now that there's fractional shares, you know, you can roll that out to any strategy. It's going to have those same attributes, same returns, same everything that you're going to get there. So what will happen is you're going to have the ability which to emulate a bigger strategy, especially on the fractional shares. And so I think that that should be interesting. And I've got to see if I can get that spreadsheet revived. I sure hope it's around. I think it might be on our OneDrive that we have. It's got a lot of dust and it's going to have to be dusted off, but it should still work.
Yeah, there's a lot of old stuff on that OneDrive.
Yeah, there's. Yeah.
But it's Wayne here. So Jay, what's your optimal sort of model like towards what? The more you've gone up in price, the more stocks is more optimal, or there must be sort of like a breaking point somewhere.
Can you say it one more time just so I can fully understand what you're asking?
So what I'm saying, like, if you're playing around with say 15 to 20 with 100 grand compared to say 35 to 500 with $500,000, what have you found more optimal?
Usually on the higher end, at least 100,000, because I have been really limited when you're looking at, let's say, 10,000 or 15,000 starting equity. But I've had to kind of retrain my whole, how I taught myself the first time around was more on the institutional level with more money. So then it's like scaling that all down and trying again. It did take quite a while. I mean, it was weeks and weeks of trying different formulas to try to get smaller portfolios to become profitable. And at first I was just thinking, okay, what if I find symbols that are, $3 or $4, $5, but of course they just weren't performing very well. And just going through the list, because I was trying to have some diversity. I was still trying to maintain maybe 15 to 20 stocks, even on the smaller scale. And I couldn't get stuff to work that well. So that's where I had to start to scale down with less stocks, but stuff that was $20 to $30 or 20 to 40. So for me, I prefer to stay around $100,000 mark, but of course we can't always do that. I have to try to develop. I do my best to develop portfolios that cover every aspect of what someone may need, whether it's small portfolio, whether it's large, small cap, large cap, that kind of thing. I hope that helps. Does that make sense?
Yeah, no, that makes sense. Yeah, gotcha. And I mean, your spreadsheet that you've got up here now, yeah, that's got a lot of good information.
Yeah, so this I put the spreadsheet up and that we were talking about earlier, and I'm still convinced, and I have been convinced for about 20 years, so that the best way to find symbols is to find something that has some sort of fundamental, that it's a legit company and all this stuff. I mean, this, like, let's see what this is. High return, high growth. Look at this. I saw Netflix on here, Domino's Pizza. Those are those stocks, right? Then we got U.S. GARP. This is always, by the way, this is very interesting. I gain a lot from looking at this sheet. Look at GARP, and GARP is growth at a reasonable price. There is no growth at a reasonable price. What is there? 9 symbols, not even. Yeah, 9 symbols. So there's nothing. SMID, which is small mid-cap growth, there's nothing. Nothing exists that falls into the metrics that we're looking for from a fundamental standpoint. Now we go low beta, high return, and you would think that the low beta, high return this is always a really good list to look at. And then we all these different screens. But look at this. This is interesting. Common sense value has the most narrowest view of value, and once again, there's a handful, 8 or 9 stocks. And then we get into magic formula. There's a lot of stocks in here. It's got a little broader viewpoint of the world. And then as we go down, old school value. There's some decent amount of stuff there, so that's encouraging from that standpoint. Mid-cap value, so there's a lot of value stuff, and you can there's a gap on this chart, right? Yeah, it goes from November to August. There's a hole in these things. I think we could fill them in, but I don't think it's worth doing. But anyway, these screens actually have a lot to do with tell us a lot about what's going on. Like accelerating growth right now, there's really not that many symbols. And it just kind of gives me a feel for what's out there, that in different spectrums and looking at stocks. But I'm still convinced that by looking at a list, and we can go over to the right side of this, and we've got liquidity factors, we've got fundamental ratios, price to sales, PE. There's a bunch of stuff over here that we've determined to do this. And we used to have a one of our associate. We had a CFA on board, and Brett defined, I think, a lot of these. I think we're still using the basic metrics that he put together, and from a standpoint of where the metrics you look at for these ratios. So we basically have set this up in a screener, just like it's very similar to what we've been talking about so far today, is looking at the ER ratios and all that. Well, this is just going through an entire database and looking for symbols that have a clear fundamental viewpoint based on some metrics. So whether they're growth or value or whatever they're doing. And you can do a couple of things. You can do multi-cap, so you can find small, mid, large. I believe we have capitalization ratios in here as well. So you can actually mix them. So back to Art, long answer, back to some of your questions you have. So let's say you only wanted to build 10 stocks and you wanted it to be maybe a large, mid, small stock. Well, the way I've always done it is take, maybe 3 or 4 of small cap, I would almost just make it easy, make it 12, do 4 small, 4 mid cap, and 4 large cap, and do a multi-value, have it into one of these screening, find the stocks that screening, and then just build the portfolio off of that. And then every 3 months you look at this list again, see what's up there. You do an evaluation process, and we do have some of that stuff out there as far as the looking at maintenance and things like that. I know I did some videos on there. I threatened to put the old videos out from me 10 years ago. It'd be kind of interesting. But yeah, but they really are focused on talking about some of the issues that investment advisors have, but they would be definitely important to watch as well, as far as stuff that you folks need to consider as well as building these things.
Bob, I may have missed it, but is that sheet available somewhere to the community? Right?
Yeah, that's what we were talking about. So we're going to make sure it gets to you some way. So everybody that is a subscriber, I know we have a list. We're going to try to, we've been trying to figure out where to put this. It'll be somewhere, maybe on a tab like we have right now on that. I don't know. I'll talk to Mason about it when we get done. He and I kind of do all the web work on that stuff. So we'll take a look at that and see where we can put that file that is behind a firewall so you guys can grab this. And, you know, just, yeah, we'll have this taken care of in the next day or so.
Thank you. Have you ever heard the term Dow dogs?
Oh, gosh, yeah. Yeah.
That'd be interesting to build a portfolio based on those.
Ah, they're garbage.
Oh, really?
They don't
Okay.
call them dogs for no reason. Dogs of the Dow. Yeah, we've run that thing. Jay, didn't we have a premiere on that for a while?
I was just going to chime in. We had it. I don't know if it's still available, but we did.
Yeah, it was terrible.
It was built. Yeah, it wasn't very good.
Yeah, I was just curious that using that concept.
Yeah, that concept is kind of weird because it's kind of a it's kind of a weird concept. It's out there, but we actually ran that thing. We actually used to have, I think we had a daily and weekly one, didn't we, Jay?
I think so. It was taken off. Yeah, it's been removed from the.
You know, we might be able to
portfolio
play
list.
with that with the expert. Maybe do a
In
multi.
other words, I've been there, done that, and it didn't work out.
Yeah, I mean, not in the past. It doesn't mean that that those stocks all of a sudden aren't working too, right? Because
Right.
we've moved into a new era in this investing world, and a couple ways. We've got a lot of new participants in the markets, so that's why we're seeing some of this volatility, and we've got people like the SoftBank guys out there with billions of dollars hammering the markets, so
Right.
who knows what's going on with the markets anymore. You get like the crazy rally we had for 3 or 4 days. It just kept extending until it got ridiculous. And,
All right. Just that just something crossed my mind, but I'm glad
Yeah.
that y'all already tried that. Now I don't have to mess with it too much.
you can still try it.
Right.
Nothing wrong with that. Like I said, we threw it out because it just, it's like somebody put a meme together on the Facebook. Somebody asked a question, I think on a live stream, and I said dividend stocks are for sissies. And the reason why there's just a lot of thought process out there, especially from the buy and hold community, that somehow if you buy and hold some of these dividend stocks that it works, and they tend to be the riskiest stocks out there because they're literally buying I guess they're willing to pay you to hold.
Right.
And
they're not the growth.
Yeah, they're not the growth stocks. They're not the stocks that are really going to do well. So, when economic situations get tough, like in 08 and 9 especially, that's where all the risk was in the market, was on the dividend stocks. All the banks, all those guys that always pay dibs, so they got hammered pretty good. I'm just looking around. Yeah, so, anyone else?
Hey Bob, it's Wayne again.
Okay.
With that spreadsheet, I find the hardest part, the technical analysis, it takes time, but I suppose the hard part, like I said, is the fundamental analysis, because that really chews up your time.
Well, we've already done that. That's the
Yeah,
point.
that's what I'm
So it's like right here, boom. So like I could take
Yeah.
this, copy it. Let's just do it. Let's play in it.
I was going to say, because a lot of my small cap, the small block portfolios I built, it only took like 2 days to research and build, and a lot of it was off the older, was it the screen that was built last November?
Right.
And they're good, and it didn't take me that long to do that.
So I'm calling this Bob screen. I'm just gonna go through this wizard like super fast. Like I'm gonna leave everything defaulted. I'm gonna take this up to 200. Make sure I get enough money. But I'm just gonna leave most everything. I'm going to set this to high activity, and we're going to build this thing and nothing flat here. High activity, and say we're going back to 15. You know what? I'm going to go back. I am going to go. Yeah, that's okay. We'll create a custom portfolio and we'll just put it in. Matter of fact, let's try that. This is what Jay was talking about earlier. So we can go down at this very bottom box, daily, weekly. So if we dump those stocks in here, chances are they're probably all going to come out weekly, but I just dumped those stocks in the very bottom box. And now if I go next, it's going to add them in. It's going to find the best one. So we do have some dailies. So here's daily and weekly, and 37 symbols, all randomly chosen. We're going to leave everything at 0. This is for advisors. Next. And so what it just did was calculated, we're going to put 5.11% in these things. And we're going to go next to allocate finish, and boom. So we'll see what I call it, Bob's screen. There it is right there. It's an allocation queue. So hopefully we get lucky and it hits right away. So yeah, so when you queue up something like this, it looks every minute for a portfolio. When it gets this thing to run 37 symbols, it's going to take like a nanosecond, maybe 3. So yeah, so we're just randomly, but yeah, so the point of the screens is that we've already screened out and honed it down to these the very tight screens as far as the metrics that we're looking for to fit into that little box that we're doing. So yeah, we've done the work for you. While this is running, we'll go back to the screen. These are just accelerating growth stocks, and the formula is not here what we're looking at, but it's actually just squeezing them down and saying, here they are. What is that? 6 to 42, like, well, 37 stocks. We just put them in. So 37 stocks met that criteria, and let's see what I have no idea what it's going to look like. It was random, but so we hit portfolio access again. Should be run through. It is. Bob's screen up 12% on. There's bad data. Look at that. Something bad in there.
Oh, I hate to see that line.
Yeah, I do too. So there's a symbol that had some bad data. So I guess maybe we could let's maybe deal with this. Let's usually what I do is go into symbol returns and see one that's got all the way through. There it is, WW. That one's easy to find. So right here, looking, these are all normal buy and sells. All of a sudden, 856,000. So what we'll do to fix this for right now, we won't research what's going on with WW, but there it is, Bob's screen. So I'm just going to go into this thing, and I'm going to go to create custom portfolio, and there's WW right there. I am just going to take WW out. I'm going to hit next. And actually, I'm going to rerun this last step here. I'm just going to click on the initial allocation factor. I'm going to let that rerun since we have one. It was 5.11, now it's 5.19. So no big deal, but it did change. Allocate. There we go. So we'll rerun that. So we'll take it out and see what it looks like after that jump in equity. Hopefully we'll get lucky and it'll kick in right away. But yeah, but that's the point of this. So what we just built was we built an accelerating growth strategy. Still in the queue. Making me. Now its allocation's running, so it's finally clicked in. Should be done now when I recalculate it is. So now when we go to Bob's screen, now the equity's been fixed. Got some volatility in it, but we got weekly, yeah. didn't do very good, this list. But you have to remember, this list was just screened last week. This wasn't the list for 2015. Does that make sense? That was this more in this period of time, the stocks that show up in this screen for accelerating U.S. growth. That's what shows up. So most recent returns are going to be much more accurate. So if we had run this same screen in 2015, we would have a different list of stocks. So what we do is on a monthly basis, we run this, and that would be, then you can update it as it goes along. Yeah, Jay was talking, I see on YouTube, chatting back and forth. He's on both sides chatting, but this is all the built and the motifs and all that. Small black Hemi, is that it there, Jay? That you were talking about?
Yeah, my motifs. Yes, the small block Hemi Cuda is the one that's actually been performing really well, and then the 351 Cleveland.
All right, I'm going to click that off. 351. Where's that at? What's the name of that one? Motif?
Yeah, motif. You got that one highlighted. Then the Hybrid Drive Motivator, it's a small block 351. Raiders of the Small. Oh, they all start with motif.
Oh, that's right. Okay. Yeah, so small block 351.
And actually, Mad Max is actually doing really good right now.
That's funny. Where's Mad?
Which is all geared towards the automotive, trucking, transportation, oil, a little bit of everything. That one's got even general store. It's got a little bit of a bunch of stuff.
So these are all motifs that are highly. Wow, that thing really did roll, didn't it?
Yeah, it did.
But that's the point of the screen, is to be able to do that. But I could take, and that was total random, but I could go back to this sheet and literally, grab this piece from here and a few from here, and then, maybe those mid-cap you could just randomly grab things and you could blend them together. So I could say, I want some growth at a reasonable price. And obviously you'd research these, but I'm just saying that's why we did all the work on the fundamentals to bring that down. And I think the biggest list, what I say it was, is the magic formula value. And
that one's definitely a big.
The one thing we don't have available, which we can pull off another website, our other website, is the descriptions of what they do. We have those descriptions and the style boxes and all that kind of stuff. So yeah, I'll definitely. So we probably could get that all together. All right, let's do one more. I think it's time. It's 3. Hopefully this was useful for you folks that are watching, and that we're able to
Yeah, it was great.
answer some questions.
Hey Bob, it's AJ. I had a quick question for you, if you don't mind.
Yeah, no, not at all.
Beautiful. Just looking through some of the stuff here, and I'm looking at AKAM. I was looking at the portfolio expert and the buy pieces, or the buy signals that came out. I know it's not refreshed for the overnight data feed, but I was just trying to do a spot check for something, and I was trying to get. I was interested in looking at Aurora Cannabis, which was a buy signal.
Right.
And then AKAM caught my attention, which is a couple of line items down. It's AKAM.
Is it right here, this magic?
Right there, line 314, I think.
Oh, okay.
Yeah, you're close. You went right over AKAM. Yeah.
Oh, 314. Yeah, right here. Yeah.
That's the one. So I was looking at that in Portfolio Expert, and if you just take a peek at that real quick, and if you look at the chart, I'm not understanding where this divergence is coming from, but it's showing the last, like if I just look straight at the graphical interface, it's giving me a exit signal was the last entry with this ticker. However, it's showing up as a $sign under the symbol NP.
Is that like a daily?
Yeah, on a daily.
Okay. Yeah,
because it was generated onto daily 1-2A.
Okay.
So if I went into the research side,
yeah, that's what I'm doing.
Sorry, into the all stats.
Oh yeah, so you're looking at raw data. You should always do what I'm doing right here. Okay, so it's there. Okay.
Okay. So if you just pull it down to the daily, so the way I did it is, and I just wanted to walk you through my steps. Maybe my steps are wrong, but I wanted to show you what I'm seeing. So if I click on all stats.
Yeah.
Yep. And then you click on the, I'll just let it load for a sec here. The daily 1-2 long, 1-2A long.
Yeah.
Yeah, because I just want to see what the database is spat out in the morning, for example, and see what, I guess analyze the positions accordingly. So what from here, if you look at line item, I think it's 10, it's AKAM, and
yep.
I look at the chart real quick. The C button is what I would click on. So now this is showing that it's got a new buy signal. It's coming in. It's a daily 1-2. But when I expand the window a little bit on the chart, you'll see the last entry or the last interaction from a graphical perspective was an exit.
Right.
So I'm trying to understand, what am I doing wrong, or am I even doing something
wrong? Well,
wrong?
it doesn't show the entry yet because it hasn't happened.
Okay.
Because it's end of day. So this is actually a common mistake. When the servers run here in a couple hours, it will show the buy.
Okay.
See, because this was a buy for today, and today, and since it's end of day, we'll go out and pull all the data in from our data vendor, and they go, oh, okay, here's what it did today. It will show there'll be a green spot where this bought.
Okay.
So it'll show today.
What I was trying to understand was that if it was refreshed, let's say last night, and it got flagged on this side here within this screen for a buy, would the arrow not indicate that on the chart? I'm trying to understand if it's a data issue that requires further analysis.
No, so we're still talking about the same symbol, right?
Mm-hmm. Yes.
Yeah, so it doesn't, the platform doesn't know that today happened yet.
Okay, fair enough.
Okay, so as soon as the data comes in at 8:30 Eastern time tonight, you go to this chart, you're going to see a green spot where it bought. It will update that chart after, because right now the last known data point is yesterday's value. So like if I list, I think I can demonstrate that here, AJ. I think it's, what was it, 10? Yeah. So if I go over here and go to research on that symbol, does it show a date? It doesn't show a date. That would be handy to have a date stamp. But yeah, it shows the buy. There's the buy. When you come in a couple hours and do this, this will have a plus.
Yeah.
A green plus. Okay. So it's not a date. So we generated the buy for the open this morning. That's the next data point. So like anything that comes out tonight is for the next morning open, and then the order will be filled when we get that data filled into the database. Because it's end of day. And I was talking to somebody earlier. That's one of my goals is to next level is to have a real-time database. So it would automatically fill that on the open. We'd know that open exists already in the database. Right now,
that's perfect, because that's a perfect segue to where I was going with this. What I was trying to understand is when you have the new position symbol versus the open position symbol, if you were to try to translate that into trading view when you were doing something real time, you would then in effect wouldn't lose the 1 day of trading numbers, or I guess maybe.
Well, we don't know that it's a buy or sell until after we get data for today. So there's no way to get ahead of it.
Okay.
You see what I'm saying? Because let's say, for instance, it was long, and tonight it's going to tell me to sell. Well, you could go in, AJ could go in and sell it, and to your custodian in the aftermarket, right? You could do it in the pre-market. Mm-hmm. But what we know is the next day open. We know the next data point is the next, that we're going to have in this database is that next open. So we're going to fill the order on the next open. And you might be able to do better or worse job. We certainly watching the futures, last night the NASDAQ was down 0.5% and up 0.5% by the open this morning. So so these markets move a lot, and depending on what the aftermarkets and how liquid they are and all that kind of stuff.
Yeah. The assumption I guess I was working on is when I'm looking at it, there was already an exit, so there's no current trade on it. There's a new position flagged. So, and because I know in the past we've spoken about the trades themselves working best for long positions and not shorts. So I was just trying to understand if I would have translated the information into TradingView, and I was just trying to think about this on my own time during the back end.
Yeah, no, I get it.
If we were to do that, maybe we could save that turnaround time because the models only work best with long positions.
Well, they don't always work best. That's all we got in there. We don't have any short positions in there.
Exactly. Yeah.
Yeah. So like if I brought up TradeStation, we do have short positions there.
Yeah. I was just trying to solve the problem for the longs first.
Yeah. No, I get it. Yep.
Hey, Robert Smith, have y'all ever thought about doing a structure where it would do a short positions to get in short on some of these stocks?
Yeah, so this is the deal. Our community that we have served for 20 years couldn't short a stock if they wanted to because their compliance department would close them down.
Oh, I got you.
Yeah, so we've only been a long only platform on this. We actually there used to be on before I named this thing WaveTech, it used to be 1.2 is what it was, version 1.2 of the original platform, and 1.1 actually had a placeholder for being short, but we realized that nobody was going to be able to go short, so we never put the short logic in.
Okay. Yeah, and the way the market is right now, I'd hate to go long on anything.
Well, yeah, boy, all the people on the channel tell me only up. I get one guy every night, only up. That's what he says, only up. But yeah, so that's the difference. Like if you have this stuff, there's, boy, I'm going to say it, it's going to hurt, but I always used to laugh at Jimmy Cramer saying there's a bull market somewhere. Not out of 16,500 symbols. If you've got a good fundamental symbol, I wouldn't be afraid to buy anything that this thing says at any given time. In fact, in 2000, when the .com thing busted, there was a lot, it was very similar times to that, in that there was a top end of the market that appeared to be driving everything at the time, and the secondary stocks, the mid cap and small cap stocks, we were actually able to take the mid caps and turn the S&P positive in 2000, even though I think the index finished down 11. Our strategy using the S&P 500 stocks was actually like up 9 or up 14, some number. So we, it was like making an interception in the end zone and taking it to the other side. It was complete, turnaround. So there are good ideas in these markets, and especially like going through a period of time flashing back to 2000 through 2003. That was a brutal, brutal time.
I remember that.
You know, and we were able to eke out some profits. It was interesting when 9/11 happened. We were pretty much, I think we were like 80% in cash when 9/11 happened. So we weren't affected. A lot of our portfolios were already moved to cash. So we've been lucky a couple times on these big disasters that have happened that we had a lot in cash. And even if you look through a lot of symbols, you'll see that we were selling, and the database was selling pretty heavy on this year, 121 into mid-February. We were dumping stocks everywhere. And I remember before
I saw
this.
that on your videos.
Yeah, and what was interesting about it is all of our advisory clients at the time, they're like, Bob, what's going on, man? What are we selling here? Market's at an all-time high. I go, I don't know, man. Just sell them, you know? And it ended up, you know, the rest of that story. So, but yeah, that's why it's important. It's really super important to have a couple things going for you, is having the ability, which a stock selection process that you're comfortable with, whether it's the one I have on the screen here, and that you're doing it fundamentally, or it's a list that you come up with. You know, Jay has built a lot of these motifs. I mean, he just like he researched them, like, you know, that's like, he used to have, I don't know, I don't think it's around anymore. I think it's morphed into this new one, but Mack Truck Hauler, where it was just all transportation stocks, right?
It's still around.
Is it? Okay,
around.
yeah.
Oh yeah, I can't touch that one. That's the original's there.
Yeah. So, but you know, but it was a theme base. So you can do theme, you can do fundamental, you can do your favorite stocks. You know, it doesn't matter, and you can test them and see, hey, is this stock that I'm putting in there? You know, looking at ER ratios, looking at how well it trades. Like that stock we were looking at on a short-term basis was terrible just now. This thing here is just all over the place. It's got a very poor rating. It's just not, you know, these trades, I mean, that's a dartboard. So
yeah, exactly.
you know, I just, you know, when I look at that, it's like those are all like random. Makes me nervous just looking at it. And possibly if we went over a weekly, maybe it'll smooth out a little bit, and you can put a little more air in it. Yeah, even then it's there's been kind of choppy. There's there's some good stuff here though. It's got, actually, it goes from a poor rating to an excellent, and I don't know, let's go 3-2. So that's why you want to look around, and I've been directing you guys for a number of months now into trying to get more on the weekly models, because I think that's how we're going to go forward the next couple quarters. And although every time I say something about this, daily database is just screaming back. It's already back to 35%. We'll see. I've seen days like today where the market's down and we get a bunch of buys. So we'll see what comes out of this thing.
All right. Well, hey, thanks a lot.
You're welcome.
Just one more last question. With the weekly models, when the market did start crapping out over all the different years when that's happened,
yeah,
like you would have seen the percentage would have started dropping before that, like each time.
Yeah, I mean, the models I was talking about in January, the weekly models trading. You know, not always. I mean, hey, let's face it. If something come out, you know, the black swan shows up, you know, and you would think that this last one was a black swan, right? But it just so happened it's set up, you know, really well. And you can see that actually here. I'll bring up this chart here. You can see, look, that here was the actual top. Look at how much selling was going on ahead of this thing. Now, grant you this big drop here, but this thing had already moved from 70 down to almost about 52, 55 range. And then as this thing happened, it was just dumping out until it went all the way to 8%. So, and then now it's ramped back in. And I was looking at this. If you look at these mountain graphs here, this is interesting looking at the database, is the peaks come early and it goes along the line, and I haven't used this line on the channel for a while, but momentum precedes price. And the same thing here, traction of the database, you can see this was the peak where my cursor is right now. That was the peak way back in 2016. It dipped down and it stayed above that. Here's that magic 42% range right in here at this level. We dipped around, we made a new high, then it went down, and then you can see where all the noise started coming in 2018, 19, and then it ramped all the way up again. But typically what happens is the early parts of the trend, maybe where we are now, is where we get a lot of traction in the trend, and then there'll be some consolidation, basically what I've been talking about on the channel. We go sideways, we consolidate, maybe maybe if we had to do a comparison, we're like 2018 where this thing is going to just go sideways. But even while it's going sideways, some of these stocks in the database could be screamers. You know, they really could go on. It's funny. Yeah, somebody on YouTube goes, only up unless your airlines or cruise lines. It's pretty funny. Yep, that's pretty much true. I still have my Buffett strategy running here, which we actually picked up another stock the other day on that. We now have JetBlue, which is underwater a little bit, and American Airlines. So it's only two, and this strategy has, what's it got? It has, yeah, this could be interesting, going back all the way to the beginning when, but we're looking here, we got two positions, we have 65% in cash on this particular strategy. But if we go over to the performance, what we're looking at here is 8 in 16 days, this thing's off the highs 8.5%, right? That's this little mark here. And if we go to performance, standard deviation is 4.2 for the drawdown. So that's like double the drawdown. That's like a blindfolded buy to get in. This is where I would implement this strategy, even where you can go in and just buy this thing, because we've doubled the drawdown and we've only got two symbols on right now. Especially if you're buying into these open positions here, you could buy, obviously you can buy, instead of paying $16.84, you can buy JetBlue for $12.30, and you got to pay up a little bit to get into American. But this is probably the beginnings of maybe a strategy. Maybe it comes on. I still think these guys get bailout money. You know, when they come in, I think there's another level on this particular portfolio. We'll see. All right, guys. If there's somebody on the Zoom that has just got something you didn't get answered, and it's gonna go for it. If not, I think we'll just call it quits. We're an hour and 55 minutes in, so I doubled.
Bob, I got one question.
Sure.
Yeah, and you feel free to slap my hand on this and say this is something for Wednesday's analysis.
Yeah, go ahead. I might.
That's fine. Since you got American pulled up there, I was kind of looking at that one the other day, and you had kind of made some comments about it, and I was looking at the moving averages, and I guess my question is more about the moving averages on this. There's a lot of these stocks that are going to be coming up on their 40-week moving average here probably mid-November, and I was just kind of curious to get your thoughts on what you expect to happen kind of when the 21-week and the 10-week collide with that. I would expect a lot of resistance, but
yeah, I just brought up AA, so AAL. We can do that this time. But yeah, so this is, yeah, you see the PPMs are starting to roll. So there's, you know, we'll see how this thing goes. But you'd still have PPM2 is at a 0.92. So we're trading just below that number right now. So this is a mixed bag at best. You know, I guess my thoughts are still that we can ultimately maybe get up to the 200-week moving average on these things. There's probably some pattern that moves us up, you know, $25+ on this stock, where there's a double from here. But that all comes out of the stimulus deal, right?
Mm.
And according to one side, they think they're close, and the other side says they're not even. So I suspect not even is the right answer. Not even close to doing a deal, but they've got to do a deal, or otherwise, the transportation. Yeah, there's no restrictions on flying. Nobody's just flying right now. I guess where you're gonna fly to New York, so you got to stay in your hotel. You can't even go to a hotel, or so I don't know what you're gonna do. So yeah, but yeah, so yeah, I think you're right. There's a lot of these 40-period moving average, especially in these stocks that are overhead. I'm sure when we get into stuff tomorrow, there's been these common themes on, you know, if we look at the tech stocks, there's 40-period moving averages underneath the action. We look at most of the other stocks that are non-tech or primary economic stocks, especially transportation and other things. They look like this. They all look the same. So there's like I remember one time, I think on a live stream I talked about where, you know, it's the tale of two worlds, right? You got the tech world and you got the real world that people have to function in, and the real world isn't very good. And you know,
it's like the 40 is the inflection point.
Yeah, I think it is, and you know, it's got like in this case here, that 40's got minus 2.45. It's major resistance. Where'd we print on this thing? Let me just put that up real quick. Yeah, it's 1502 here. Yeah, we didn't even get close to it. This is a weekly, so yeah, that's going to be. But what the good news of what's happening is every week we stay sideways, we don't go down much. That downward momentum is starting to bleed off. So sometime, you know, next 4 to 6 weeks, this chart's going to look pretty good probably. And then this will be maybe a point where we can take out. You can see that's right where we stopped the last time, was right at that 40. That was smack on right there. It's a high 22.37, and the high was 22.80. Right there. That was a dead on hit. So yeah, so that will be the inflection point. And I think there's going to be a lot of these stocks, and I don't, you know, a lot of folks are out there promoting the coming stock market crash. Just don't see it. Not from the viewpoint of our database. Certainly, as weeks and months go by, will change. But this is actually probably a really good view of the world from that standpoint. Is that there's a lot of symbols, I bet, like this. We'll go through them tomorrow and do that. But it's a valid point.
Yeah, appreciate you taking the time to look at it.
Yeah, no problem. All right, guys.
Can I ask one just on behalf of JG? He doesn't. No, stop it. It's already too late. Past my time. It's not a question for me. No.
Why don't you answer it?
I can't. It's JG doesn't have a microphone, so he can't ask. He asked if you could quickly go through the ES futures move today. I don't know if you want to cover that just real quick, or if that's even a quick question.
Yeah.
Is that more in depth than?
No, just dangerous.
Dangerous. Oh.
Yeah. I mean, this is weekly. It basically did what it was supposed to do, I guess. Let me just. I will put something up here real quick. Yeah. So we got the RXT sell. We traded down. We almost traded The low was 491. S3 was right there. We should. This is actually the overnight. So this is the grid for tomorrow, and S192 low so far tonight, 3,500 even to 06. That's pretty quiet. Yeah, so I would suspect we're going to see at least S2 on this thing, maybe 78 on this. But yeah, as far as I didn't mean to move that, but as far as it goes, yeah, I mean, that was what it was supposed to do. We get the RXT sell, it traded right into this. It should go at least 2, maybe 3 days down. I think if we get a close under 34.99, that's going to suggest a top, and then we're going to go to probably 3,400, maybe mid 30. Yeah, we're going to go down back into those averages. But yeah, I'm not sure what to say about yesterday's. Yeah, that was pretty much most of yesterday right there. Oh, but yeah.
Okay, thank you for covering that.
All right, folks, this is it. Thanks for coming. Appreciate it. And tomorrow, don't forget, we do have the live stream from 1:30 to, we'll call it 4:15. So anyway, we'll see you there. I actually have to get out of here tomorrow. I have somewhere to go shortly after the live stream. So anyway, thanks for watching, everyone. Appreciate it.